Hey guys, this is Market Update. In this video, I'm going to talk about this, which is our once-in-a-lifetime opportunity to invest in a new asset class. We can't get too focused on the short term because new asset classes do not come around very often. The last one was probably securitization, which is where you take mixtures of different types of bonds and debt securities, put them into one thing, sell them to investors, and then joint stock companies and securitization of those as well, obviously now known as equities. These asset classes do not come around very often. We have a new one in crypto. So if we focus too much on the short term, we may miss the giant opportunity here of a new asset class being monetized. That is the trade. I want to go through that in this video. Bitcoin is just consolidating in this insanely boring price action right now, sideways and down, but that's how Bitcoin moves. I want to highlight these areas on the chart. 1, 2, 3, 4. 4 areas of price action around 5 to 6 weeks are responsible for all of the gains this calendar year. So that's how Bitcoin moves. When it's not doing that, it's just moving sideways, down, boring. That's what it does. Even despite all the FUD recently, US selling, Germany selling, Mt. Gox selling, we still haven't broken through this 60K support level. So yeah, we wicked down, recovered up, and so we're just here. I still think if you look at the longer term chart, we can go all the way down to 50K and still not break down from this bullish price action. I do believe we're in a bull market. Onchain shows that, RSI shows that, the macro cycle shows that. So that's what I believe. I've also updated the course. You can see these new updates here. So if you're a course member, go and watch those. If you don't have it yet, I'll leave the link below. I'm going to put the price up at the end of this month. I'll leave it at the old price if you want to get in now and see the updates as well. Links for everything below. And Bybit, if you do trade crypto, 30K deposit bonus down for Bybit as well, linked in the description. The big opportunity though is being on board an asset class that is monetizing, and we're still in that phase and we're so early. Like if you look at the Bitcoin ETFs, the most successful ETF launch of all time, we've got the Ethereum ETFs coming up this summer, and then potentially a bunch of other ETFs as they come down as well. Now the ETFs alone, these are not bullish or bearish or anything. They're just a way for people to buy things. So that's good, but it doesn't mean anything, right? Gold has ETFs and it's lost 99.99% of its value versus Bitcoin, right, since 15 years ago. So an ETF isn't bullish or bearish. It just gives people options to either buy or sell it or trade around it or whatever. The real bullish thing is the actual asset, the fundamentals, right? So we have this new asset with Bitcoin. I'll just focus on that, which is non-sovereign asset. And that means it's not a security, which means many types of people can hold it and many types of funds can hold it. And so it can absorb an amount of world wealth, which securities can't. Because they are securities, there are rules around that, and also a security, its capital structure, can't hold, significantly more wealth than that business can produce, right, over time. Now you can pump up the price to earnings ratio to some extent, but eventually the earnings do weigh on it, actually. What you need, obviously, with money is different, so we know that. So why we focus on the short term is so that we don't play ourselves and get wrecked going in too much at the top of a bull cycle with FOMO. So we wreck ourselves and we lose our assets. The only thing we need to do is stick around for a long time period. I'm going to focus on the next 10 years. Don't lose your crypto. Don't get it stolen. Don't lose it on a centralized exchange, and don't wreck yourself with it. Just hold it. Keep it safe. These areas at the top of bull markets, you can very easily see them. These brown areas here, these are the peaks of bull markets. You can still buy them because the prices are low if you're holding for at least 8 to 10 years. But what we don't want to do at these areas is trade on leverage, go long with everything we've got, and then get wrecked. So these areas, if you need cash, if you're overexposed and you need cash for the next 18 months, these are areas to sell. They usually last for a pretty long time. It's not like we get into it and then sell. No, it can still go up another 2-3x from there. So you've probably got a 3 to 6 month period during the peak of a bull market where if you are looking to sell and have cash for liabilities, you can do that. If you're buying here as well, it's actually no issue whatsoever. You can still do that, and I'll show you why in a second. The only thing here is just be aware of these areas. You can see here, this cycle, we're not there yet. We're in a huge uptrend, but we're not at the peak of a bull cycle yet. So I still think we're in a bull market, a long way to go, a lot of price action to go, and price appreciation to go in this cycle. But let's not muck this up. This is an opportunity for the longer term, not just now. The reason I say you can buy tops of bull markets, unless things get absolutely nuts, like the 2017 cycle, that price was clearly just way above any kind of normal growth of the Bitcoin network. I think those days are probably behind us now because there are way more people involved, which means volatility actually gets dampened, which actually isn't a terrible thing if you're looking to invest over the longer term, right? Because this is the compound annual growth rate of Bitcoin, currently 60% a year. That incorporates the entire last cycle where it was trading up at 50, 60, 69,000, right? Very high, but you're still, if you're just consistently buying, getting a 60% annualized return with BTC. There's simply nothing at the size and scale of BTC that is giving us that. It's really the mixture of Bitcoin being a new type of monetary asset and being a commodity that it isn't limited by the capital structure of an organization. So it can grow to any size. It can hold any amount of capital. But because we're in first, these institutions are so slow to react that we're on the front foot and we can take advantage of the monetization. Bitcoin is volatile, right? So if you look at a price chart, 128-day moving average, it's volatile. You're going to get drawn down. It doesn't matter because what we're in for is at least 8 years, 10 years, that huge growth that's going to happen as it becomes institutionalized. That is actually what Bitcoin is if you just buy regularly. There's no volatility in this. It goes up. It never goes down. Even the previous bear market, it's the blip on this. So what are we looking at is something that's currently annualizing at 60%. And that's going to drop and it's going to go to 40% annualized and 30% annualized and maybe 20% annualized, but not for another 10 years, not for another decade. It's just the perfect mixture of an asset that could grow extremely large in typical size into an asset class. 5 trillion, 10 trillion is really the first step for BTC if you believe this is a monetary asset that will be incorporated to X amount of world wealth, 1, 3, 5%, something like that, right? And why not? Because it is a large, liquid, easily tradable monetary asset. Now, this is what BlackRock is doing. BlackRock now have the ETF, the most successful ETF of all time. Why would they not now taken that information, incorporate Bitcoin into their other funds? Well, that's what they're doing. Again, starting extremely slow and little, but they're telling people what they're doing. BlackRock's Strategic Income Opportunities Fund, 3.5 million worth of their own Bitcoin trust. And the other fund here, which is their Strategic Global Bond Fund, purchased a tiny amount of BTC. If you look at a lot of funds around the world, a lot of them will hold gold in there. Even though there may be bond funds or income funds or something else, they hold gold because it's different. It's a small diversification within that fund. And they play around with all these different numbers like Sharpe ratios and everything. And they have to show all these numbers for their investors and everything. And they say, oh, you want some income? Or like, what do you want? Income or growth or opportunities, whatever. So they have this list here and they put a bit of gold in for diversification to kind of up the Sharpe ratio a little bit. Well, if you're looking for high Sharpe ratio investments, Bitcoin blows everything out the water. So even if, right, all the other stuff, so adoption and Lightning Network just write that to zero. You now have asset managers bringing this thing on like they did with gold. And so the appreciation, the size and growth of the Bitcoin market will continue. These institutions move at a glacial pace. It's so obvious what they're doing. We know exactly what they're doing. They will do it, but we can move faster than them. So that's an opportunity for us. I do believe crypto has now crossed the chasm and is large enough and big enough now that you can't not own it. As an individual or a portfolio manager or investment manager, your duty is to index the market for your clients. If they say, look, I just want to own the market, I want to get the market return, Bitcoin and crypto is part of the market now and you must index it for them. So what are you doing not owning it? So that growth will happen. It will get pushed very, very slowly over the next decade. But that's the trade. The trade is all of these rich people saying that has to be part of my diversification as well. So you see Michael Dell reposting Michael Saylor here. Michael Dell clearly owns some Bitcoin on his personal account. You can see he's posting about BTC. Now, whether Dell puts this on their balance sheet, that is entirely a different question. But wealthy people that diversify want to own the market, and Bitcoin is part of that. That's the trade that we're in. not the short term. It's the trade of Bitcoin just going to 1 to 5% of world wealth, 1 to 3%, even 1 to 2%. It's a huge uptick from here. It's like a 10 to 15x if it makes that. This is world wealth. This is world global asset value right here. That's the trade over the next decade coming in. That's what we have to focus on, and not the short term, because that is the wealth accretion that we want, right? That next decade of these investors diversifying into this new asset class. All of what I've just discussed there is inevitable over time. That's how wealth finds its way around the world into different assets, right? The roadmap is super clear on that. The real question is, does Bitcoin remain somewhat desirable that people want to diversify into it? Is Bitcoin for real? That's the real question. I believe so, but many people don't. And so they must presumably think it's worthless, literally zero. But if you do believe it is somewhat desirable in some way, then the roadmap is very clear. I believe it, of course. You probably do as well if you're watching a crypto channel, but that's the risk. Is Bitcoin for real? The roadmap and how funds diversify into it, that's very, very clear. So that's the trade, in my opinion, if you believe in BTC. If you're a trader, 30K deposit bonus to Bybit down in the description. Crypto Investor course has been updated as well, so if you've got that, just check out those videos. I'm James, this is ManZG. Cheers for watching, and I'll see you in the next one.